Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free Forex training videos, and free Forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot. Alright everyone, today's short video is going to be about swing trading off of the daily charts. And this is probably, I'm going to go back over my entire Forex trading career of 7 years of doing this. And I can tell you right now, when I first started trading, what I was told is to trade off of 15-minute charts, 10-minute charts, 30-minute charts. And the problem with that is the market moves so fast, the stress level that it puts on you is unreal. And you have to stare at charts all day, and you end up taking more trades than you should. Whatever gains you make, most of the time you end up giving back to the market. So when I started stabilizing in my trading is when I started focusing on trading twice a day. And I analyzed the charts over the weekend to look at the future of what I think the market could do in the future. I look at 15 different currency pairs, and I look for good opportunities on each pair, buy or sell. If price would go here, then we will close out a profit here. If price would go here, we'll close out a profit here. And part of that is I've backed down my trading so that I'm trading off of the daily chart. So you can see this chart in front of me. This is the Euro Pound daily chart. Now each one of these candles represents a day. A green candle means the price was higher than when it opened. It was an up day, and a red candle means price went down for the day. It's very easy. But through that, in my other training video, I have actually a very short training video that explains how Forex trades in a range 80% of the time. In fact, right now, you may want to stop this video and check that out real quick. If you push the button down on the left corner of this video, you see that? Yeah, that'll take you straight to a video that explains how the Forex trades in a range 80% of the time. I want you to understand that concept, okay? Because we have several different ranges here that we're looking at on this chart that I've been trading for a while. In fact, this range is actually tighter. But the big one that we're talking about here is right here. Now, again, watch the video on how Forex trades in a range 80% of the time, but you can see that this pair has been trading in a range. It broke out a couple times, boom, broke out there. But for the most part, for the last 3 months, this thing has been running in a channel, in a range where we've been buying here, selling at the top, buying, selling. And usually when we buy, let's say we buy here, we'll pull out our profits here, because sometimes see some of these candles didn't quite make it all the way to the top. I'd rather pull out my profits early and to lock in my profits. Okay, so swing trading, as you can see in any market. In fact, let's go to the pound dollar, and you can see this is a little bit more choppy, but you can see that this pair, even draw just a crappy trend line here. This is not even the greatest one, but you can see just a little bit how there's a range there. There's a range here, right? Because Forex trades 80% of the time in a range. Oh, let's move that up a little bit. All right, let's just put it here. And you can see by looking at this that there was opportunities, and when you know where the range is and where you're at in the range, that you can sell, you can buy, there's many ranges. You can buy, sell, buy, sell, buy, sell. So, folks, I want you to think about focusing on swing trading off the daily charts rather than focusing on lower time frame charts. It is way less stress. It is a lot easier to see an opportunity on the charts. So let's go back here to where we were at on my Euro Pound. Where would we get in? So let's say we're right here. In fact, let me draw a vertical line. Let's say today is whatever this is, somewhere in January, right? That's somewhere in February here, beginning of February. And we've seen, let's back this out so we cannot see anything up to that point. Okay, let's say we're here. In fact, let me zoom in here. There we go. Okay, so at this point we see that this currency pair has been trading in this range. Price is all the way down here. what would we do now? Well, I think the best opportunity, since we were at the bottom of the range, is to take a buy position here somewhere around 8,300, put a stop loss below this the swing low right here, which is about 80. I can't read that very good because I'm so low at the bottom. Let me stretch this in a little bit, which is about like 82.12, right? So if we were here, and today is whatever that day is right there, I would say, you know what, we're right there on the line, 8,300. I am going to buy. In fact, usually around this time here, I'm already going to set a buy position in advance. What's called a buy limit order. What it says is when price is going to take me all the way down into 8,300, then it's going to trigger my buy. So we're going to buy. My stop loss will be below the swing low, and we're going to take this trade all the way up and close it somewhere before this line around 83.70. Okay, 83.72. So let's move it up and let's see what happened. Boom. In 2 days. Now, here's another thing to think about. Not only would I set this buy position, but I'm also going to set this sell position, okay? And I'm going to set this sell position to go short and sell this pair when it goes back down. So we're just going to keep selling, buying, selling, buying. So make sure your stop is below the swing low, and your sell position stop is below a swing high. So right now, the nearest great opportunity for a sell position is going to be all the way up for your stop loss is going to be all the way up in here in this range right here. But I would stay away from that as best as possible. So now we can see this thing pan out. In the second day after we took the trade, we got pulled out of our profit. Boom, we made our profit, and in the very next day, boom, our sell position took. So what happens? It took a few days. Let's say 1, 2, 3, 4, 5, 6 days. The pair already dropped back down, which we got into the buy position, and it kept going on and on and on. Now, originally, I put my stop losses on this pair below. So where I put my stop on this trade was below. You see the other channel that we traded way back in fall of 2011. That the swing lows of this, the lows of this channel, I made sure that I knew that price would have a difficult time breaking into another channel so quickly. So, and this is called dead space. Once it breaks past this, it can easily fly through these dead ranges. But break into another channel is a whole different story. So I put my stop loss above this bottom of this channel. So I think my stop loss was like somewhere up in this range in here, just a little bit past that, okay? And so anyway, what happened is price went up. We were a few hundred. We weren't too far from being stopped out, but we weren't sure if price was going to break into another channel. So right here, where we originally sold this pair again, we sent out our trade signals to our customers and told them to move your profit target back to your break even. So if you sold at 8,400, I told them to put their profit target at 8,400. That way, because I knew price would at least come down and retest right here before it shot back up. If it shot back up. If it didn't, which it didn't, then who cares? We lost a trade. But at least we protected our downside and got out of the trade at break even. But you can see that once price came down, I put another buy position in here, and we continued buying and selling in that range ever since. So we've taken, I don't know exactly how many, but I'm guessing 16, 17 trades on this pair over the last couple of months. We've done very well. We've won every trade. One trade we took out at break even. In fact, we're currently in a trade right now, and I think we're up 30 pips. And let's see where this is at. We're actually going to close this thing out soon. Yeah, this I think right around this 70 or 72 mark is where we're closing for profit. So price has already come up close to that today, 65. So it could by the end of today or by Monday it could shoot up and trigger that. In which, of course, we're going to send out a trade signal today for our customers to sell this pair again at slightly under 8,400, so that when price does spike out, takes out our profit, boom, we're automatically back in another sell position, and we're just going to ride it all the way back down. So anyway, folks, that's the end of today's lesson on swing trading. Again, swings, the market swings up and down through these channels. Trade the swings. Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free Forex training videos, and free Forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot.